If you ask any insurance salesman if you need life insurance or not, they will give you a million reasons why you should buy it. I'm going to do something a little bit different in this video. I'm going to tell you 7 reasons why you don't need life insurance. And if you fall into this category and you are buying life insurance, you're just wasting your money and you should probably cancel it right away and save yourself that money. And of course, I've saved the best one for last, so make sure you stick around all the way to number 7 to find out which one that is. What's up, guys? For those of you who do not know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, which is an online life insurance platform here in Canada where you can actually view quotes 100% online and apply 100% online as well. So if that sounds interesting to you, I'll put the link in the description below and you can check that out. But without further ado, let's just get right into the video. Now, before we get into the 7 reasons why you don't need life insurance, let me just briefly explain life insurance here in Canada. So we have 2 different kinds. We have term life insurance and permanent life insurance. With term life insurance, it's really just meant to cover you for a very specific period of time. Maybe you're just having kids, you have a house, you have some outstanding debt, you just got married, and if something were to happen, your loved ones would be very financially impacted. Term is the best way to cover off that liability. You can pick different terms such as a 10-year, a 20-year, or a 30-year, and typically you want to use that until you don't have a need for life insurance anymore. Maybe your kids are out of the house at this point, you paid off a lot of your debt, you have a lot of investment income, and your spouse is now a little bit more financially independent. If something were to happen to you, of course, it would be emotional damage, but there would not be as big of a financial impact. Maybe it's time to cancel that life insurance. Now, permanent life insurance, on the other hand, there's 2 different types. We have whole life, we have universal life, and that's now really meant to cover you until death. So this is really good for people looking at estate planning, leaving something behind for the next generation, and of course, paying for taxes upon death. If you have that second vacation home that you want to pass down to the next generation, having some type of liquidity upon death so you can pay those taxes and pass it down is really important. Now, you may have heard about maybe that you should invest in life insurance and maybe you should buy a permanent life insurance product that you can use during your retirement. I would say this about it. This is a very bad idea for the vast majority of Canadians. It's a very complicated strategy. There's a lot of things that can go wrong with it. And when you compare it apples to other traditional investment strategies out there, such as just an RRSP or a TFSA, it just is not as beneficial and it's a lot more complicated and there's a lot more things that can go wrong. So if you're the vast majority of Canadians who haven't maxed out their RRSP or their TFSA and they have high interest debt that's still outstanding, this is not a good idea. I would avoid it and just focus on much more traditional investments like I mentioned, RRSP, and do that before you would ever consider this strategy. Now, with that being said, for the minority of Canadians that are the high income earners, they're in a high tax bracket and they've already taken advantage of other traditional investments such as those that I've spoken about, it could be a good idea. I made another video, a very lengthy video, where I compared these strategies apples to an RRSP. And if you're interested in that, drop a comment below and I will send it to you and you can look at that and compare them apples to apples as well. But with all that being said, let's get into the actual 7 reasons why you don't need life insurance. Number 1, no one is counting on your income. So income is one of the primary reasons that you need life insurance. If you were to pass away, would there be loved ones within your life that are financially dependent upon you? And if you passed away, they would be very impacted. And usually that is your income. You're bringing an income into the household. So if you're married, you have kids, you're contributing to the household. If something were to happen to you, that income would be the biggest financial impact on that family now that there's no income coming in from you, of course, because you're passed away. So if no one's dependent on your income, you have no spouse, you have no kids, your aging parents don't rely upon you financially, well then there might not be any need for life insurance and you might not need to get it. Number 2, you had life insurance because you were in a relationship, you were married, but now you've just gone through a divorce. Well, now maybe it's a time to revisit your life insurance and maybe cancel that policy that you got for your spouse, but now you're no longer with because you're now separated. This is, of course, assuming you guys don't have any kids together and you're doing a split. The house is now split up. You guys are moving on and it's time to move on with your life. Well, in this case, maybe it's time to cancel that life insurance. You don't need it anymore. You bought it in the first place to protect your spouse. Now you're not with them. It's time to cancel your life insurance. Number 3, your children are now grown and out of the house. Again, this is one of the primary reasons why we get life insurance is to protect our family. And if you're now at a point where your children are getting older and they're moving out of the house and you're now a little bit more financially stable, and if something were to happen, they wouldn't be as financially impacted, maybe now now is a good time to revisit your insurance needs and either cancel them altogether or maybe just severely reduce them. Your kids are out of the house now. If something were to happen to them, yeah, of course they would be emotionally impacted, but they're out on their own now. They wouldn't be financially impacted. They can take care of themselves. I hope they can at least. So maybe it's a good time to either cancel your insurance at this point or don't buy it altogether if you've already gotten to this point without it. Number 4, you're self-insured. So what does this mean? Well, this essentially means that whatever you would need for life insurance, let's say it's $1 million or 1.5 million or something like that to cover off your income for 5 or 10 years and to cover off any outstanding debt that you have, maybe you have that in some investment accounts in cash, and maybe you're just quite financially stable as an individual with your family, then maybe you don't need life insurance at that point. If something were to happen, they would have these large cash and investment reserves to live off of. And of course, maybe your debt is paid off as well, or you could cover off your debt with these investment assets. Now, I will say this, if you're still quite young, it makes sense to just buy a term product because it's so inexpensive that you might as well just do it, because at age 25, 30, 35, even 40 and 45, it's still so inexpensive, you might as well get it. But if you're a little bit older, maybe you're 55 or 60 and you're thinking, well, I still have kids, I still maybe have a need for life insurance, but you're now self-insured. At this point, you have so many investment assets and you have very little debt. It might be a good idea to just not buy it, save your money, and you can self-insure with your investment portfolio or your savings that you have. Number 5, you're now approaching a point where you just have no need for life insurance. And we kind of talked about it, but we'll talk about it again here. This is now really getting to the point where, again, I mentioned the need is to protect your loved ones in the event that something happened and they're very financially vulnerable. Well, that's usually when your kids are growing up, you just bought a house, you just got married, and you're starting your life. However, if your kids are starting to move out of the house, your spouse is a little bit more financially independent, they have their own job and their own investments at this point, your house is paid down, your car is paid off, your investments are doing quite well, you don't have any high interest credit card debt, you've paid off your lines of credit, you've paid off all your other credit cards, etc., etc. Now you're starting to get a need where maybe you don't need life insurance at this point, and maybe it would be a good idea to either maybe wait till your term is up and cancel at that point, or maybe cancel it right now. Number 6, you're debt free, or you have debt, but you have no cosigner. So let me explain what I mean by this, okay? So if you get into a relationship and you're either common law or you're married and you have outstanding debt, well, if you passed away, that debt would then pass on to your partner. And if you guys had any assets together, those assets would essentially be attached to that debt. So that's something you don't want to do. You don't want to leave debt behind to your spouse or your loved one. However, if you don't have any spouse or common law, you're not married, and you have debt and no one co-signed it, so no parent co-signed it, no friend or anyone else, no relative co-signed for it, if you pass away, that debt doesn't pass on to your family. So essentially how it works is when you pass away, everything they own gets put into this estate. And if you have any assets within that estate, maybe such as, a car, a house, or some other things, then that would all get put into this estate. And then whatever debt you have would also get put into this estate. And they would essentially at the end of the day say, okay, well, he owns this and he owes us this, so let's just try and take it, and whatever we need to do to get our money back, we're going to do that. However, if you had no eventual destination for these assets because you're not married, you don't really care if it goes to your parents or your sisters, your brothers, or other relatives like that, well, then it doesn't really matter. And there's really no need to get life insurance to cover that off. It's not like you need to get it just to protect the bank. I mean, that really would be why you're getting it, is to pay the bank off at the end of the day. And we don't really care about that. So number 1, if you're debt free, or number 2, if you have debt but no cosigner, maybe you don't need life insurance. And number 7, finally, and I said this one, the best one in my opinion, is you don't feel the need to protect your loved ones. And so they can just figure it out on their own. So even if you have a family and you have kids and you have a spouse and you have a house and you have mortgage and debt, etc., 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 and you just say, you know what, I came from the hard school of knocks, they're going to come from it too. If I pass away, they'll have to figure it out just like I had to figure out. I would not say this is a best option, but I did insert it in here for a little bit of comic relief. Obviously, you want to get some type of life insurance at this point to protect them. But if you're that cold-hearted person that says, screw it, they can figure it out, then I would say you don't need life insurance. I hope you guys enjoyed this video. If you guys have any comments or questions, drop them below. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next video.